Hello, and welcome to Look Back, Look Ahead. I'm Frank Calderone. Before I get to this week's report, I just want to answer a question which was asked of me last week. The answer, yes, I do tie my own bow ties. Anyway, all three major indexes last week were lower due to investor fears of higher interest rates and an impending recession as some companies announced future job cuts and lower profit forecasts. The Dow, S&P, and Nasdaq have now been down 4 of the past 5 weeks. We did have a fair amount of economic news. The most market moving was the Consumer Price Index, which was increased by more than an expected 0.1% in August, 8.3% year over year. Core CPI, which does not include energy and food prices, increased a more than expected 0.6% compared to a 0.3% reading in July. Retail sales increased by a better than expected 0.3% in August, while increasing by 9.1% compared to August of last year. The Producer Price Index declined 0.1% in August. It was the second consecutive decline for PPI after a 0.4% drop in July. This is a positive report for future inflation as goods prices continued to decline. Initial jobless claims were 213,000, a decrease from the previous week's revised count of 218,000. And finally, the index of consumer sentiment from the University of Michigan increased slightly from 58.2 in August to 59.5 in September. Year to date, the Dow is down 15.2%, the S&P down 18.7%, and the Nasdaq is down 26.8%. The yield on the 10-year U.S. Treasury bond is 3.45%. The yield on the 2-year Treasury bond is 3.87%. When the yield on the 2-year bond is higher than a 10-year bond, we have what is called an inverted yield curve. Oil closed at $85.24 a barrel. Gold closed at $1,671 an ounce, with silver closing at $19.50 an ounce. For this week of September 19th, on Monday we'll get the Home Builders Index. Tuesday, building permits and housing starts will be reported. On Wednesday, we'll get existing home sales data. Also on Wednesday, Fed Chairman Powell will give his statement on the economy and interest rates. It is expected that rates will be increased by 75 basis points, all in an effort to combat inflation. Thursday, initial and continuing jobless claims and the leading economic indicators will be reported. And on Friday, the Purchasing Managers Index on U.S. manufacturing and services all will be reported. And as always, we'll keep a watchful eye on these and any other events that may and will shape the markets. In the meantime, be diversified with your investments and always know what you own in your portfolio. If you have any questions pertaining to your portfolio or anything you've heard in this video, give me a call. This is Frank Calderone from Raymond James in New York. Have a great week. Be well, stay safe, and remember, always look ahead.